Hello traders, Gary Wagner here. Just about noon in Honolulu, 6 o'clock in New York. It is Wednesday, 28th day of March, 2018, and this is the Daily Report for Gold and Silver. Tremendously strong slide in the precious metals markets, with gold closing lower by $18.20, settling at $1323.80. We did get out of a trade in profits. We'll talk about that when we pull up our technical studies. 27-cent decline in silver, $16.26, and a large part of the decline in precious metals directly due to a strong U.S. dollar, up 0.8%, 78 points, closing at 89.76. Dow fractionally unchanged, 23,848, but the Nasdaq did trade dramatically lower on the day. In terms of Bitcoin, closing down 40 cents and unchanged, 78.80 and 78.95 in the CME and the CBOE Bitcoin futures contracts. Continuing and accelerating from yesterday's $10 drawdown, it was a combination of dollar strength as well as selling that accelerated today, resulting in sharply lower gold pricing, currently down $17.80, a decline of 1.33%. The low on the day being $13.22, and it has closed just off of those lows. If you recall from yesterday's show, we did have a long position in the market, and we moved our stop up yesterday to $13.36, which was hit today, knocking us out on our current trade, resulting in a profit of $700 per COMEX contract. And considering that gold prices are about $12 below our exit price, I am content with profits that we took today in our long gold trade. The question now becomes, where is gold headed and where can we expect to find support? And traders, based upon my current technical studies, I believe that there is a strong possibility that gold pricing should find substantial and major support at approximately $1,317 per ounce. That is based upon the study I have up on the screen, which is a Fibonacci retracement for both a long-term data set as well as a short-term data set. And what we find is we do get a harmonics, a price point in which both the long-term and the short-term data sets come up with the same number. We have a 38% retracement based upon this long data set and a 78% retracement based upon the shorter data set, both occurring at 1317. And traders, because the market broke effectively and strongly below a 61.8% retracement of this short data set here, which starts at 1306 and goes to 1356, I believe that 1317 is the most likely of price points in which gold will find some kind of solid footing. Realize that we are looking at current April futures, and our next trade will be a couple months out, because June is the contract that will become the most active futures contract in just a little bit. Therefore, my recommendation is to maintain our current neutral stance with a flat position after pulling profits today and await our next signal, looking to see if the selling continues and whether or not gold pricing finds support at 1317. As we spoke about in today's opening letter, the decline in precious metals pricing today is a combination of dollar strength and selling. However, the majority of downside pressure came directly from dollar strength. We have identified a critical level of support at 88.58. The market, in fact, came down, touched this price point, and over the last two trading days has moved substantially higher, gaining about 0.9% today, trading at 89.76. Silver also closed under dramatic pressure, losing about 1.7%, a net drawdown of 28 cents on the day. We can see that the overall characteristics of prices recently has been an extremely narrow and defined trading range with $17 per ounce as our upper level resistance level and support coming in roughly at about $16.10 per ounce. Market closed at $16.26. If it continues to track lower, I would look for this price point around $6.10 as a potential level for support in silver. And traders, lastly, a quick look at Bitcoin and Bitcoin futures, closing off fractionally lower. 78.60 is our current pricing. However, if you recall from last week, we identified a candlestick pattern called a three-river evening star. The following day, we did see Bitcoin futures trade with a lower low as well as a lower high, but the size of the drawdown on that day was not really a confirming candle. We did get a confirming candle in Monday's trading activity. That's this candle here. And although over the last 2 trading days, the net change on the day has been fractional, the characteristics of having a lower high each day as well as a fractionally lower low allows us to continue to forecast Bitcoin going to approximately $7,200 per coin. Traders, we did raise our stop yesterday, effectively locking in a little bit more profits. And traders, we were certainly lucky we did that. A tremendous slide in the marketplace, taking gold pricing down over $20 on its lows, closing down $18. Of course, we got out at $13.36. Market closed at $13.24, and I truly feel fortunate, even though we only made about $800 per contract. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.